Hi, my name is Thomas Krallo and welcome to my YouTube channel where we talk all things money, trading and finances in general. Now this is gonna be the lesson number 2 of my 10-day Learn How to Trade Properly challenge. So if you haven't watched the previous lesson, lesson number 1, then I strongly recommend you doing that before watching this lesson. So let's dive right into it. So in this lesson, we'll talk about most common mistakes made by traders. Now, let's have a look at the most common mistake number 1, and that is using information from YouTube, fake gurus, etc. And I've briefly touched on this topic in the previous lesson, and in my opinion, this is one of the biggest struggles when it comes to this business in general. As I've said before, if you want to become a doctor or a lawyer, just go to university, spend a lot of money, a lot of years, and then you will become a doctor, a lawyer, and whomever. However, with trading, it's not that simple. It's incredibly difficult to even find good information. And believe me, YouTube and all the gurus that give away their trading courses, this is the worst place to look. And I'll be completely honest with you. Before I even started teaching other people, there are actually quite a few reasons why I started teaching other people how to trade. And when I was considering it a while back, I decided to check out what's the competition. And I mean, maybe there are so many other trading coaches and traders, successful traders, who have proven track records. And mine it's going to be available on my website for anybody to see. However, as I was going through YouTube and digging through all the websites and, Google searches and all that standard stuff that anybody is doing who is interested in trading, I gotta tell you, 99%, when I looked at the 99% of the information that was out there with my view of an experienced trader with a background of 7 years of hardcore trading, successful trading, I was just almost crying and laughing and crying again, because that stuff that is on YouTube, people are sharing their experiences, and most of them are not even selling anything. So I cannot really say anything bad about them. They're sharing their experiences, and then they actually get a lot of views, a lot of subscribers, and then somehow they disappear. Some of those channels disappeared quite quickly. And I do respect those people who are actually starting this journey, diving into somehow technical analysis and general market analysis. And some of them have been on the right path. However, they're sharing that incomplete information, that they're sharing everything that they have, but the information is not complete, and the stuff that they are using, it's not bad, but it's not enough. And a lot of people will be, subscribing to them and following them and, learning all the same techniques and structures and patterns, and then they just fail in the same way. And it's okay to look around and, try this and try that and keep an open mind, but only if you are trying to build your own system. So, a little bit from this guy, a little bit from that guy, some information for free, some information for some money, some information for a lot of money. That's absolutely okay. Some good information always costs money. And in this way, you will be building this approach of your own that suits you and works for you and actually is making you money. But the biggest mistake is using the information from YouTube and just jumping right into money trading. And this is just devastating. And unfortunately, this is the reason why the percentage of people who fail at trading is so high. It depends on the source, but I was just staggered to find out that around 90 to 97% of retail traders, so private day traders just like myself, are losing money sooner or later. This is incredible. Some say 70%, 80%, but I saw some numbers as high as 97%. And why is that? Because it's incredibly difficult to find any good information that actually works. Then keep a correct mindset, which is going to be discussed actually in one of the lessons, I believe. Let me check. And this is going to be discussed in lesson number 4 of this Learn How to Trade Properly challenge. People disregard all of that, and then they jump right into money trading, and of course maybe they get lucky here and there. And I know some people who were lucky a few months and they made actually a lot of money, but then they lost almost all of it, or half of it, and then just gave up. But yeah, it's a big trap set out by so many other people, intentionally and unintentionally. So you have to watch out for that and be extremely careful. And before you even try anything with money, paper trade. So the next most common mistake is disregarding trading psychology, expectations, and mindset. So as I've said in also previous lesson, we talked about this a little bit. You have to understand that trading consists of many more things than just dry technical analysis. Dry technical analysis, in my personal experience and in my personal subjective opinion, of course, everything is subjective, especially in trading. Proper technical analysis constitutes around 30%, 30-40% of successful trading. The rest is made up of things like trading psychology, a huge part. Then trading statistics, proper, clean trading statistics, those are incredibly helpful. And those we will also discuss in this 10-day challenge in one of the lessons. Then personal trading algorithm, that is just unavoidable. I know quite a few successful traders, including my mentor and myself. We all use proper trading algorithm, personal trading algorithm, which was tailored to our understanding of the market and to our skill level and to our actual preference of this job. So this allows us to keep a systematic approach. So let's not get into too much detail about personal trading algorithm. There's going to be a separate lesson about that. And about trading psychology. So what is trading psychology? Actually, a lot of things in trading psychology are extremely simple, but if you don't know them, then you might actually end up in this potential pitfall. And that is something that will be also separately discussed in one of the lessons. And as an example is a lot of people start trading, especially day trading, because they want to make a lot of money. And I cannot blame them, but what do they expect? And those are the expectations. If you expect trading to be easy and you expect that you will start making a lot of money right away after a free trading course or a cheap trading course or some strange trading course, or maybe a few YouTube videos from people who don't know what the hell they're doing anyway, and you expect that, oh, this looks so simple, that guy, he made $300 in like 4 hours of work, my goodness, this is $100 an hour. And this is the only thing that you start to think about. And I've been there, and I had this problem as well, and I had a severe problem because I was taught by a millionaire who made his millions in trading. And it's a long story, I'm not gonna get into much detail about that. So I'm not self-taught. And oh my God, I thought that that's it. I will start trading in just maybe a few weeks, and then I will start making millions, and I'll be a millionaire. And when I'll be a millionaire, I'll buy this villa, I'll buy that watch, I'll buy this Mercedes, and then I'll wrap it in custom wrap, whatever. And that's the only thing that I was thinking about. These were my expectations from trading. And my mentor, he actually made a mistake that he was saying, yeah, you will have all of that. Now to my students, and in my learning program, a huge portion is on trading psychology. There are many tips and tricks and circumstances that you can identify and know where you're at in terms of, for example, stages of any trader. Those are actually also quite interesting, and there are 3 of those, and those are greed, fear, and then in the end, risk and money management. And those 3 stages are quite simple, but they are quite simple to understand. But a lot of people who are not aware of those stages might get into quite a few pitfalls along the way. So the correct way to approach, one of the correct ways to approach trading is expecting nothing from this business. So not expecting to make money, not expecting to buy anything from trading at all, expecting only that it's going to be difficult, that you're going to need to spend a lot of money, that you will probably still lose money in the very beginning. And if you expect all of these somehow negative things, then believe me, it's going to be extremely beneficial for you long term. You will have this set expectation of work, not leisure. Because people, when they think trading, they think of Wall Street and millions and billions of dollars. But this is hard work. And even if you have the best trading strategies, systems, patterns, whatever, they're not gonna work. You will sooner or later still lose a lot of money because wrong expectations, wrong mindset, wrong trading psychology, and so on and so forth. So this is a huge topic when it comes to trading. And a lot of people, the most common mistake is disregarding trading psychology. Now, the next most common mistake is jumping right into real money trading. And this is something that I've briefly discussed in the previous lesson as well. Don't do that. First, learn, then test your new knowledge, then test it yet again. And only then invest a small amount of money. Never start with a lot of money right away. Even if you can afford to start with $10,000, start with $1,000. Check and see how it is to work with real money, because trust me, demo trading and real money trading, even though everything is the same, buttons are the same, the idea is the same, the trades are the same, but 90% of traders, and myself including, have that psychological pressure that it's money. And I was battling it over the years, and I somehow succeeded, but I still do have this pressure. And most of people will have pressure because it's money. I mean, it's something that we use to live, to buy food, to pay utilities, or buy nice things. So it's important, and that's why it's okay to have that kind of a stress feeling. And that's why when you start trading, your main objective is to avoid unnecessary risks and, of course, unnecessary psychological pressure. So don't jump right into money trading. Learn, test your knowledge, maybe paper trade, demo trade for a few months or at least a few weeks, but I'm always saying a few months. Make sure you keep clean trading statistics according to your personal trading algorithm, and only then invest a small amount of money. What do so many other trading gurus do? They start teaching you bullshit methods, and then they right away ask you to open a money account with some broker. And that is just a giant scam. Don't do that. Don't open a money account with anybody, especially in the very beginning, until you know what you're doing. You've tested it, and yes, it's working. Only then. And I cannot stress this enough. There is no point in losing a lot of money in the very beginning. All right, the next common mistake is having no patience. Trading is complicated. Once again, you will need to spend at least a few months on education, and only then you might expect to have a fighting chance in the markets, and then you'll still have to work a lot with yourself mentally and even technically, adjusting your trading algorithm and making sure that you're keeping clean trading statistics to be able to adjust your trading algorithm. And you will slowly and gradually start developing your own view to the market, your own feel to the price action, to understanding and explaining the psychology behind the market, the price movement, and how the support and resistance levels work. And that is actually somehow simple, but actually it's not. There are many million rules of how to do that correctly. So this work requires a lot of patience. If you're not a completely impatient person, you're just sitting there wiggling your tail and you want to do everything and you want to do today and you want to make $1 million tomorrow and you cannot wait, trading is not for you. Just close this window and move on to some other, I don't know, video about how to make money in poker or gambling or some shit like that. But trading is not for you. This is only for patient people who know what they're doing, who can keep a cool head, educate themselves, test, back test, and then slowly and gradually start investing money. And believe me, I know that you're thinking, oh, well, yeah, he thinks that he's so smart. But yeah, I've been there and I've done that and I know what it's like. So I'm actually doing you a favor by telling you this. And if you listen to me, then you will perhaps save yourself a lot of time and a lot of money. So that's as simple as that. Now, the next and the last common mistake for today is the spaghetti. Using too many identical tools. There are so many people who I look at their charts and they have the super small price action, and they have one indicator, the second indicator, the third indicator, the fourth indicator, the fifth indicator, and then they have some indicators in the price action as well. And we usually call this spaghetti, when you have a bunch of shit on your charts that just explains absolutely nothing. Let me tell you, just jumping a little bit ahead, there's going to be a separate lesson on indicators, trading indicators. And when you are using too many tools, it's not as bad as when you're using too many identical tools. Take indicators. MACD, stochastic, RSI, VWAP, ATR, whatever. There are millions of those damn indicators. But guess what? They're all mathematical, and they are all pretty much showing the same thing. I know that there are different calculations. They are calculating different things, and they are basically, some of them are calculating EMEs, some of them are calculating price action in some way, blah blah. But what I mean is they're identical in the way that they're actually calculating the past, what happened in the past, and they're calculating just mathematical equations. So they're calculating just basic raw data from the past. And when, for example, you're using a combination of RSI and MACD, you might as well just use either RSI or MACD. You don't need to use two of them. And can you trade just with indicators? Of course not. There are so many other tools that you need to be looking at, and to try and explain the psychology behind the market movement, which is the hardest and the most reliable way of analyzing the market. And this is also going to be in one of these lessons here in this challenge. But yeah, get rid of spaghetti on your charts. You must be able to see price action, and if you want to use some indicators, and I do personally use indicators, I have MACD and I have stochastic, and I'm using them in very rare occurrences and circumstances when I wasn't able to catch the price that I was looking for with my approach of trading and how I am trading. So what I'm using the most, and those are the key market levels and the explanation of psychology behind the market with the price movement. And if sometimes there is some kind of a backlash and the price doesn't really come to my limit order or a stop order, and then in these kinds of circumstances, and I see that the impulse is happening, so there is a sell-off or a buy-in, so there is this impulse that I can profit from, then I would perhaps increase my amount of stop and I would enter with an indicator. But it's very rare, and I do not personally like indicators. I do have them on my charts, but I do try to stay away from them, simply because they don't really explain the market. They do explain something that happened before, and they do work sometimes, but if you backtest any structure and system, indicator system of any indicator, then you will see that in long term, for example, for the period of 12 months, an indicator will be producing either a zero result or a negative result, or a super small plus. It's really a gamble. Indicators are a gamble. But we'll talk about the indicators more in depth in another lesson. So yeah, this is pretty much the 5 most common mistakes made by traders, and quite honestly, there are many more. And you need to be aware of all these things if you want to be trading successfully and making consistent profits, and learn how to do it relatively quickly. And if you don't want to spend so much time and years on self-educating, then I strongly recommend finding yourself a trustworthy mentor, for example, me. Now, if you want to learn more about trading, and if you want to learn more about me and my system and how I'm trading and what I'm looking at, then go ahead and register for my free webinar. It's absolutely free. That's where I do quite a lot of free webinars, and I do discuss these kinds of topics more in depth, including my trading strategies and the kinds of entries and exits that I'm taking, the risk and money management that I'm using, and all of that good stuff. So if you're interested, hit the link in the description below and register for my next free webinar. Please subscribe and hit the bell icon so that you're notified when I make a new upload, which is going to be tomorrow, and that's going to be lesson number 3 of this 10-day Learn How to Trade Properly challenge. Thank you very much for your attention, and I'll see you tomorrow.